Welcome. In this video, will Xan coin continue to rise? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. In our previous analysis video, we closely examined how the price, after making a significant breakout, returned to the broken zone and entered a healthy retest process. At that time, the price was testing a critical support area, and the behavior it displayed clearly indicated that it was building a solid foundation for a continued upward move. As expected, after completing this retest phase, the price started to move up with strong buying momentum, breaking through key levels and showing a significant rise. Looking at the current chart, we can see a different and quite striking structure: a flag formation. In technical analysis, flag patterns typically appear during short consolidation phases following strong upward moves and often signal a continuation of the trend. Structurally, it is quite typical for the price to move within a narrowing channel, either sideways or slightly downward, after a sharp upward surge. This indicates that the market is taking a short-term breather, but buyers still maintain control. The flag formation we are currently observing fits this description perfectly. After a strong upward move, the price is consolidating within a narrow range and is now approaching the upper boundary of the pattern. If the price successfully breaks out above the flag, it would be technically reasonable to expect another strong upward movement. Notably, an increase in volume during such breakouts often helps the price reach its target levels more quickly. In flag formations, if an upward breakout occurs, a measured move rule is often applied in technical analysis. According to this rule, the height of the initial upward move before the flag is measured, and an equal distance is projected upward from the breakout point to determine the target. From this perspective, a breakout above the flag could imply a significant upside potential. On the other hand, we should not ignore the bearish scenario. If the price drops below the lower boundary of the flag and breaks downward, a short-term correction may be on the table. However, based on the current market structure and momentum, the probabilities currently favor an upward breakout. In conclusion, after previously gaining strength through a successful retest phase and continuing its upward move, the price is now consolidating within a flag formation. If it manages to break out to the upside, just like after the earlier retest, it is highly likely to initiate a new bullish wave. Therefore, in the coming period, close attention should be paid to both the upper boundary of the flag and volume activity, and confirmation of the breakout should be awaited. Because with a confirmed breakout, price acceleration toward key targets would be a technically strong scenario, but we must also consider other metrics beyond just trend structures. Stay tuned. When we take a close look at the MACD indicator, we can clearly see that the MACD lines have currently dropped below the zero level. In technical analysis, this typically indicates that the price is losing strength and the market momentum is weakening. Especially when the MACD lines fall below zero, it suggests that the prevailing downtrend is still dominant, or at the very least, that the buyers have not yet fully taken control. However, there is a very important detail here. If the MACD lines start to converge below the zero level and eventually make a bullish crossover, this can produce a technically strong positive signal. A MACD crossover below the zero line often indicates that the price has found some equilibrium near the lows and is entering a preparation phase for a potential upward move. These kinds of crossovers are considered some of the earliest signs of possible trend reversals. Currently, the MACD lines are starting to move closer together, and early signs of a developing crossover are beginning to emerge. If these two lines make a bullish crossover in the coming period, we could also see this movement reflected on the price chart. In other words, this positive signal on the MACD could correspond with upward momentum in price and the beginning of a new bullish trend. That said, a crossover alone may not be sufficient. For a more robust and reliable bullish expectation, the MACD should also break above the zero level and move into positive territory. Moving above the zero line confirms that buying pressure has overtaken selling pressure and that the market has fully shifted in a bullish direction. Therefore, it's important to monitor not only the moment of the crossover, but also the movement of the MACD following the crossover. Additionally, the histogram bars should be closely observed. If the histogram begins to shrink and approach zero, this can be another signal that the current bearish momentum is fading and that a potential upward wave may be approaching. In conclusion, although the MACD lines being below the zero level signals current market weakness, a potential bullish crossover at this stage could provide strong clues that an upward move may be starting again. In the coming period, the timing and behavior of the MACD crossover will be critical. If the anticipated bullish crossover occurs, it is technically quite likely that the price will turn upward in parallel and begin moving toward new target levels. bullish crossovers that occur below the zero line often carry stronger upside potential. When we closely examine the chart, we can clearly observe that the price has moved above the 200 EMA. This development is considered a highly critical signal from a technical analysis perspective. The 200 EMA is one of the most reliable indicators used to determine the direction of medium and long-term trends in the market, and many professional traders and institutional investors use this level as a key reference point in their decision-making processes. First and foremost, the price breaking above the 200 EMA and closing above it signals a shift in overall market sentiment from negative to positive. This also triggers a significant change in investor psychology. While most investors tend to act cautiously when the price is below the 200 EMA, confidence in the market increases once the price moves above this level, leading to bolder buying activity. Therefore, this breakout represents not just a technical barrier being overcome, but also a psychological one. Additionally, the price attempting to hold above the 200 EMA shows that buyers are more active in the market and are making a strong effort to support the price. Especially with strong moving averages like this, the level acts as resistance when the price is below it, and as strong support when the price is above it. As long as the price remains above the 200 EMA, this area becomes a key support zone, and buyers are expected to step in during any pullbacks to push the price higher again. Another important point here is the slope of the 200 EMA. If the 200 EMA is starting to turn slightly upward from a flat position, it could signal the beginning of a bullish trend. Not only does the price need to be above the 200 EMA, but the upward slope of the EMA itself offers additional confirmation that the trend is shifting more strongly. If the slope starts to accelerate upward, this becomes a very positive development for medium and long-term investors and can attract more buyers into the market. With the price moving above the 200 EMA, it is now possible to identify new potential target levels. In the initial stage, previous local highs and resistance zones may be targeted. If the price manages to stay above the 200 EMA, testing and breaking these areas becomes increasingly likely. Furthermore, multiple consecutive daily closes above the 200 EMA lay the foundation for a strong upward move and can attract the interest of large funds and institutional investors. However, there is an important factor to be cautious about. The possibility of a fake breakout should always be considered. Even if the price moves above the 200 EMA, if the volume does not support the move, or if the price quickly dips back below the average, the signal may be misleading. Therefore, seeing not just a brief move above the 200 EMA, but a sustained presence supported by rising volume is essential for a healthier bullish outlook. In summary, the price moving above the 200 EMA and breaking through this level is a highly positive signal that suggests a favorable transformation in the trend structure. This development brings a positive sentiment to the market both technically and psychologically. If the price continues to hold above the 200 EMA, the likelihood of further upward movements and new highs increases significantly. However, traders should always act with additional confirmation such as volume, closing patterns, and price behavior to establish a safer and more reliable trading strategy. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.